Well, dipping back into bear markets, futures are pointing to a lower opening this morning. The Federal Reserve announced yesterday in its July minutes that the economic uncertainty is, quote, very elevated due to the coronavirus and the lack of fiscal action. Joining me right now is Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation this morning is Forbes Media Chairman and former Republican presidential candidate Steve Forbes, along with Strategic Wealth Partners President and CEO Mark Tepper. Great to see everybody this morning. Thank you so much for being here. Ken, let me kick it off with you. Still no stimulus in sight. What kind of an impact is this going to have on markets? You heard what the Fed said yesterday.
Yeah, so actually it cuts both ways. The Fed's saying something that we all acknowledge, which is this virus is really creating havoc in our economy. There's fits and starts and unevenness and so forth. But of course, when the Fed says it, there's a lot more bite to it, right, than when we say it. The stimulus package, I do think something's going to come out, and I think, it's going to be helpful and supportive. But remember, the two sides, when the Fed said, hey, we have these uncertainties in the economy, it also means we still have the Fed put in place. We still have the PAL put in place. We still have that safety net that if things get really wobbly again, Federal Reserve will go in there and double up and triple up and quadruple up on their efforts. So that's kind of the way I take yesterday's minutes from a month ago.
And yet, look at the yield at 0.653% on the 30-year. The 10-year also is so close to 0% interest rates. Not a lot of alternatives here in terms of allocating capital, even with that uncertain backdrop. Ken, do you still want to own stocks?
Absolutely. Look, as long as our stocks stay above the 50 and 200-day moving average, not to get so technical on you, but again, we look like a nice, gentle chart going up. Keep increasing your stop-loss orders. We may have to pay for this a little bit down the road, but we do have this FOMO that happens every day, FOMO, fear of missing out. And it's very real, Maria, very real, because people are missing out. You have those hedge managers that are behind the eight ball, and they need to get on and they need to kind of jump on stocks to not be so far away from the averages.
Yep, it's a great point. Mark Tepper, jump in.
Yeah, Ken, when it comes to FOMO, how much higher can FOMO take us? I mean, we already recovered all of the losses that we experienced from the crisis in 6 months. And personally, I'm just having a little trouble with the math. The street's expecting $164 in earnings for next year. You apply a very generous multiple of 20 to that. That gets us to about 3,300 at year end. So how much can FOMO continue to help us?
Again, I think it helps create support. But to your point, look, we are going to have some type of correction. We've gone up almost parabolic here. You do have that FOMO, as I mentioned, as you mentioned, kind of helping out. But at the end of the day, there are no alternatives. Maria just mentioned you have the 10-year at 0.65. That's kind of, look, we know markets can stretch. We saw in March how quickly and how decisively markets can really stretch to the downside. And we also saw how quickly they can stretch the upside. So, we have to give the market credit that it never has the happy medium. It's either overheating or, falling apart like it did in March. There's no happy medium.
Yeah, I mean, speaking of parabolic, how about $2 trillion in market value for one company? Apple, the first company to reach this $2 trillion milestone during the intraday trading session yesterday, before the overall market actually declined. This company's stock has more than doubled since its March 23rd lows, Ken. And now we're looking at a stock split coming soon. Would you be putting new money to work here?
Look, we always like to buy Apple and pull back. We still hold it long. I do think it's going to get more exciting. Look, we heard Tesla's going to do a split. Maybe more companies, maybe Amazon will do a split. For those people, again, I know back in the day, you always want to buy a round lot, so to speak, and commissions were high. So it really doesn't make that much of a difference now. But psychology-wise, buying Amazon at $3,300 a share versus buying at $200 a share, you may get more retail interest when stocks like Apple and Tesla do a split.
Yeah, Steve Forbes, what do you make of all of this? What is it going to take for this this market to take a breather here, even in the face of this stalemate in Washington, Steve? Markets keep going up. We are expecting a decline this morning, of course. What's your take on what's most important here this morning, Steve?
Well, just listen to the Democrat convention. If anyone had any doubts that this party's going socialist, you were disabused of that on Monday night. I'm wondering, with Ken, when is the market going to fully factor in the fact that Democrats might win? And if they do, despite all the happy talk of what the Fed might do, the bottom line is it's going to really damage the economy. You're not going to get 20 times earnings next year. You're not going to get $164. You're going to have a full-blown recession when they apply all those new taxes, 40% capital gains tax. Why isn't the market factoring that in more?
Steve, that's a great question.
It's the right point. What do markets think?
Look, we're actually putting a newsletter together thinking on November 4th when we wake up, assuming that we actually sleep on November 3rd, that we may not have a president the next morning, that literally we may not have a president. This would be counting Chads like the year 2000. And so, Steve, really, that's what keeps us up at night. That makes us kind of worry that if you have this blue wave and there's no check and balances, we see what type of bills they put out. $3 trillion, and most of that going to, pay down debt from 20 years ago. At the end of the day, you'd have maybe something like a Treasury Secretary Warren. That'd be pretty scary. And you're right. They're going to the left. They're not coming to the middle. And that's obviously very scary. And I'm not sure why the market hasn't factored that in yet, quite honestly, Steve. But my guess is after Labor Day, that's when it's going to get real. And that's when you have to kind of tighten up your stop-loss orders, because I do think on November 4th, we may not have a declared winner.
So at this point, do you think markets still think that Trump takes it? I mean, because if markets thought that the policies were going to do much different after the election, I agree with Steve, markets would be trading down.
Right. Look, there may be the check and balance. Maybe the market sniffed out that Republicans hold on to the Senate and kind of, where Obama started with, having that kind of check and balance, and you can't get through heavy legislation with the Senate, that's Republican. So maybe that's kind of the fail-safe here that the market's thinking about, that maybe it does flip to Biden, but then you have the Senate kind of squeaking out some victories there, being 51-49-ish, and still kind of have some check and balances so you don't get these huge, legislative, social agendas coming through.
Well, we'll see about that. Ken, I know you'll be watching closely, and we'll talk with you soon over the course of the next 75 days. Thank you so much, Ken.
Thank you.